Hi everyone, Jeff Clark was supposed to join me today, but due to technical difficulties, I'm going to do this video on my own. You know, in the comments sometimes I hear people ask, why is Mike laughing about this really bad news he's giving us? Well, I'm not laughing at the bad economic news or the situation that we're in or how bad these things could make people's lives. What I'm laughing at is the stupidity of the people making these choices, running these things. I mean, Janet Yellen, Ben Bernanke, Alan Greenspan, Jay Powell, they all are making the worst decisions, and so is Congress and the President of the United States. I mean, the stupidity just never stops. Only about 1% of these people know anything about economics, and I'm including Powell and Yellen and Bernanke. They know microeconomics, but they don't seem to grasp macroeconomics, the big picture of what's happening. And when I see these choices that our presidents have been making, I mean, George Bush weaponized the US dollar a long time ago, and every president since then has been using the US dollar as a weapon. And it's going to come back to bite us in the end. So anyway, here is a tweet from Jim Rickards. The stupidity never ends. Biden declares an end to imports of Russian gold. Seems not to know that Russia is among the world's top gold producers and is buying its own gold for rubles as part of a plan to end dollar hegemony. Biden is a sanctions amateur. And I'm sorry I'm laughing, but this is true. He is a sanctions amateur. So there was this, yesterday, there was an article on Zero Hedge about this ban on Russian gold imports, and it includes the G7 countries. So here is the tweet from POTUS. The United States has imposed unprecedented costs on Putin to deny him the revenues he needs to fund his war against the Ukraine. Together, the G7 will announce that we will ban the import of Russian gold, a major export that rakes in tens of billions of dollars for Russia. Well, let's look a little bit deeper into this. Here are China's and Russia's holdings, their gold reserves. And I believe the Russian gold reserves are up about 7-fold from where they were at the beginning of this century. It might be 9-fold. I should have made a chart of that before doing this video. But they have been increasing their gold reserves hand over fist. And now they're, you know, a gold standard is self-funding. What you do is you offer to buy or sell gold at a particular price, and if it's profitable for the mining companies to dig up gold and sell it, they sell the gold to the central bank, and the central bank prints up notes as a claim check on that gold. This isn't a gold standard that they're on, but it's similar to the way that we used to do it. You know, when the Treasury issued gold notes, they stood ready to buy unlimited quantities of gold, and they would just print a note and take that gold that would have gone into a coin or gone into circulation somehow out of circulation and put the Treasury note in circulation. So gold standards are self-funding. But the ramp up that they've had, and this is just the past couple of years, the ramp up that they've had in their gold reserves is enormous. Now, all of these charts are from this Zero Hedge article. What we see here is the euro measured in rubles. And so the ruble was crashing here, and the euro was gaining strength right after the invasion of the Ukraine. But then what you see here is everything that Putin and the Russians have done has caused the euro to lose value against the ruble, and the dollar chart is the same. And this goes back to 2015. So they've wiped out all of the gains that the euro has made against the ruble all the way back to 2015. This is their current account balance. So that is net imports, exports, and foreign investment is the current account balance. And what you see here is that Russia is always turning in a positive balance of trade and current account, and the U.S. has this enormous deficit going on. And so Russia is being somewhat responsible. They've got raging inflation over there right now, but they've been somewhat responsible with their finances, and we have been running our country like a banana republic. I just don't know how long this can continue to go on. And the article ends with, as for the price of gold, what happens when the second biggest gold mining nation in the world and a major source of supply is cut off from the Western market? And this is a chart of the major players in the gold mining sector, China being the largest, Russia the second largest. And they're going to take this out of the equation when it comes to supply. And price is based on supply and demand. So if we go into a recession here and the stock market starts to get worse and starts to go into a crash, you're going to see demand for gold explode just when they've gotten rid of about 10% of supply. Now, there is a speech that Putin did at Putins Speech. Is this a declaration of independence, and are we King George? This was a long, boring speech. It was about a 50-minute speech. And all of it, almost all of it, was just political rhetoric. And they make this crap up. So it's Putin blaming the West, and the West and we blame Putin, and it's all this finger pointing and stuff. And then he's coming out with all these new economic policies to boost their economy and stuff like that. But this was given at the St. Petersburg International Economic Forum. I was there during this forum. I didn't speak at this forum. I was speaking at another engagement that Michelle and Anna put on, Michelle and Anna, and they did a wonderful job. Big shout out to them. I want to thank them for hosting this event and inviting me to speak there back in 2010. You couldn't get a parking spot anywhere in St. Petersburg during this event. And here I am. Boy, that was a long time, 12 years ago. I've aged quite a bit since then. But this is the St. Petersburg branch of the Russian Central Bank. And so I want to read you a little bit of Putin's speech. I spent hours and hours condensing this big, long speech down into about a page and a half. So this is Vladimir Putin at the 25th St. Petersburg International Economic Forum. And what I've done here is everything is still in order. I haven't changed any of these quotes, but I've edited it all. I've edited out all of this stuff that was taking up space, and I've pulled out some gems, some truths out of the amazing pile of rhetoric. I mean, this is just, most of it is a bunch of BS. But you read this stuff, and it doesn't matter whether it's coming from the US or from Russia or from the Eurozone. It's all a bunch of political rhetoric. But buried in it, there's always some truths. And if you dig deep enough, you can find them. Such fundamental business notions as the inviolability of property and trust in global currencies have been seriously damaged. Regrettably, they have been undermined by our Western partners who have done this deliberately for the sake of their ambitions in order to preserve an obsolete geopolitical illusions. The era of a unipolar world order has come to an end. This era has ended despite all of the attempts to maintain and preserve it at all costs. The concept says there is one, albeit strong, power with a limited circle of close allies. They essentially work in one direction in a zero-sum game. A world built on a doctrine of this kind is definitely unstable. Moreover, they crudely and shamelessly impose their ethics, their values, on culture and ideas about history, sometimes questioning the sovereignty and integrity of states, and threatening their very existence. If some, I hate this, I hate air quotes, but I've got to use them here because it was in the speech with these quotes, and they're sort of making fun of these words. But if some rebel state cannot be suppressed or pacified, they try to isolate that state or cancel it, to use their modern term. Sanctions as a weapon have proved in recent years to be a double-edged sword, damaging their advocates and architects just as much, if not more. Surging inflation in product and commodities markets have become a fact of life long before the events of this year. The world has been driven into this situation little by little by many years of irresponsible macroeconomic policies pursued by the G7 countries, including uncontrolled emission and accumulation of unsecured debt. Because they could not or would not devise any other recipes, the governments of the leading Western economies simply accelerated their money-printing machines, such a simple way to make up for unprecedented budget deficits. Over the past 2 years, the money supply of the United States has grown by more than 38%. Previously, a similar rise took decades, but now it grew by 38%, or $5.9 trillion in just 2 years. We have all heard about the so-called Putin inflation in the West. When I see this, I wonder who they expect to buy this nonsense. People who cannot read or write, maybe? Anyone literate enough to read would understand what is actually happening. The rising prices, accelerating inflation, shortages of food and fuel, petrol, and problems in the energy sector are the result of system-wide errors the current U.S. administration and European bureaucracy have made in their economic policies. According to the UN, in February 2022, the food price index was 50% higher than in May of 2020, while the composite raw materials index has doubled over this period. Under the cloud of inflation, many developing nations are asking a good question. Why exchange goods for dollars and euros that are losing value right before our eyes? According to the IMF, global currency reserves are at $7.1 trillion and 2.5 trillion euros. These reserves are devalued at an annual rate of about 8%. That's the current rate of inflation. Moreover, they can be confiscated or stolen at any time if the United States dislikes something in the policy of the states involved. I think this has become a very real threat for many countries, and it has. Once again, the world is going through an era of drastic change. International institutions are breaking down and faltering. Security guarantees are being devalued. Some international reserve currencies have set themselves on a suicidal path lately, which is an obvious fact. In any case, they clearly have suicidal intentions. Still, the principle of planning one's spending based on how much you earn remains relevant. The mirror card, so this is a change in the global finance systems. The mirror card payment system has successfully replaced Visa and MasterCard on the domestic market. It is expanding its geography and globally gaining international recognition. Changes in the global economy, finances, and international relations are unfolding at an ever-growing pace and scale. There is an increasingly pronounced trend in favor of a multipolar growth model in lieu of globalization. Of course, building and shaping a new world order is no easy task. Still, it is obvious that it is up to the strong sovereign states, those who do not follow a trajectory imposed by others, to set the rules governing the new world order. Only powerful and sovereign states can have their say in this emerging world order. Otherwise, they are doomed to become or remain colonies, devoid of any rights. Now, for years, I've been giving presentations on the death of the global dollar standard. Now, everybody is calling this the Great Reset. Just over the past couple of years. I started presenting this back in 2009. I've always been quite a bit early, but it was obvious back when I was writing my book in 2005 and 6, it was obvious that the world has these various economic systems that last for somewhere between 30 to 50 years, roughly. And that the next one was coming up sometime or other, and that it's going to be a huge shift this time. It's going to be something that everybody on the planet feels. All of the rest of them were baby steps off of something rock solid, gold. and they were baby steps. This is going to be in my next book. It got cut from my first book. Baby steps off of gold, and then this transition is going to be something huge. It may or may not include gold or something real, but it's going to be something where we're going off of just fiat currencies. Which brings me to this next article. 2 countries apply to join the BRICS, the emerging markets and developing countries, and it's Iran and Argentina. And down here at the end of the article, it says, during the session on Wednesday, Russian President Vladimir Putin said the 5-member group was working on setting up a new global reserve currency based on a basket of currencies of their own countries, and Russia and China have been working on a system to bypass the SWIFT system. It's done. It's already in place, and they're using it. So these countries will be using it. So these are huge nails in the coffin of the global dollar standard, and you have to be ready for the shift. We have been abusing this privilege that we have had of being the world's reserve currency by weaponizing the U.S. dollar, and it is such a shame that we have done this, because we could have done this for another 30 or 50 years if we hadn't abused it with such huge trade imbalances, current account imbalances, and then all of these embargoes and trying to freeze people out of, countries out of the international monetary system. So that brings me to this meme that we have used. I've used this several times, but I just think that this is so funny. The Biden's new ban on Russian gold imports is going to backfire, and Russia and China will win on this. This is another case of us shooting ourselves in our own foot. And then Stock Shaman says that Dr. Copper is saying we are already in a global recession. And so here's his chart on that of the price of copper below $4 a pound, down over 24% from its highs, which is, when she passed 20% or so, that's a bear market. So it's down to 16-month lows. Well, I did some charts of my own just to get a bigger picture on this. So his chart goes back 1 year. I did a chart going back 5 years, and what you see here is that we're not even down yet back to pre-pandemic levels. And then I did a chart going back more than 50 years. It goes back to 1972. This is 2022, so it's just over 50 years in this chart. And what you see here, big inflation back in the 70s, and then this big, huge inflation early in this century, and it peaked after the global financial crisis. But this point right here was where oil was peaking at over 140 bucks per barrel. And we are now back to those highs that we were at back in 2006 through 2008. And when a couple of weeks ago, or about a week ago, I showed this chart from the Bureau of Labor Statistics that produces all of the inflation data, the CPI and stuff. This is the producer price index, and what I showed here was that from it collapsed and went down 50% during the pandemic here, and then we were above 100% back in May of 2021. Well, it takes a 100% change just to fill in that hole. You pull back 50%, you have to add another 50% on top of that. You have to add 50, which is 100% of 50 on top of that 50%. So that gets you back to even. But here we are at 101% in May of this year over May of last year. So all of this is energy, which is a cost to everything that is produced all the way through the supply chain, and this is measuring energy at the very beginning of the supply chain, so crude oil. And copper, when they dig up copper, those prices that you just saw are a reflection of copper from the refineries. And so then it has to get sold to a company that makes plumbing pipe, which then has to sell it to a wholesaler, which then has to sell it to a real estate developer, which then has to sell you a home. So this takes quite a while. So I still believe that we're in for a couple more months of big inflation, and then we're going to see this big deflation as the Federal Reserve breaks the economy with their next rate hikes. And here is another thing that adds to inflation. This article in The Atlantic is very interesting. We'll put a link below this video, but the end of the millennial lifestyle subsidy. And this is about all of the companies, these companies like Uber, that were using all of this venture capital cash to have losses. Year after year after year, they were operating at a loss, and it comes to some $16 billion with some of these major companies that have been trying to gain market share at the expense of burning through all of this cash that they got in their original funding rounds, trying to become the biggest in that area, and then they planned on raising their prices. Well, they see what's coming, and they have to raise their prices now, and they are. And so one of the last things I want to show you here is John Williams of ShadowStats Government Statistics, shadowstats.com. This is the original methodology of calculating inflation back from the 1950s to the 1980s. The Bureau of Labor Statistics was using a certain method of calculating inflation, and John Williams takes that same method and does the calculations based on the way the U.S. government used to do it, and he comes out with over 16%. This is about 16.5% year-over-year change in inflation as we know it. This is all caused by the central banks and Congress and the president all spending like drunken sailors. And so I want to leave you with this meme from Rob Keentz. Rob is a friend of mine. When he was here in Puerto Rico a little while ago, we went to dinner a couple of times. Anyway, the Fed on Monday be like, this is the Fed board members on their way to work with all the wreckage they leave in their wake. And it's a good thing he's got his goldfish with him. I want to thank you for watching. We'll see you next time.
At GoldSilver.com, we have a price match guarantee, free shipping, and global storage options. Get the best-selling book, Guide to Investing in Gold and Silver, for free at GoldSilver.com.